Alright, let's look at the basics of currency trading. Now all currencies are quoted, or most currencies rather are quoted with 4 decimal points. For example, British pound US dollar is quoted as 1.9455. What it simply means is 1 British pound, if you go to a money changer and you give 1 British pound, in exchange you will receive 1.9455 US dollar. So British pound is the first currency, US dollar is the second currency or the quote currency. Now let's say British pound US dollar increases from 1.9455 to 1.9555. It simply means that British pound has gone up by 100 pips. Now what you need to do is you need to ignore the decimal and you got to subtract 19555 from 19455 to get 100 pips. And if it decreases to 1.3955, it simply means British pound has gone down by 100 pips. Again, you ignore the decimal points. Now when I say 100 pips, it actually means how many dollars? That depends on whether you're doing a standard contract or a mini contract. Now if you're doing a standard contract, 1 pip is $10 if you're doing a British pound USD currency. But if you're doing a mini contract, 1 pip is $1. So if you make 100 pips on a standard contract, that's $1,000, and you make $100 if you do a mini contract. So you times $1 with 100 pips. So let's look at one profit calculation. Let's say the current price for Euro US is 1.232023. Now always you will find two quotes. The first quote is called the bid, the second is called the ask. It simply means that when you have to buy euro, 1 euro, you will have to pay 1.2323 US dollar. But if you sell 1 euro, you will receive 1.2320 US dollar. So remember this. When you buy, you always pay the higher price. When you sell, you always receive the lower price. So let's say you decide to go and buy euro because you think it's undervalued. So if you buy, depends whether you're doing a standard contract or a mini contract. Now if you do a standard contract, the minimum size is 100,000 euro. If you do a mini contract, the size is 10,000 euro, which is 1/10 of the standard. So if I buy 100,000 euro and the exchange rate is for every 1 euro I need to pay 12323 US dollar, I will have to come up with 123,230 US dollar, which is 100 times the exchange rate. However, whether you do a standard or a mini contract, your investment is just 1%. So all you need to do is just pay 1% of 123,230, which is $12323. Now if you're doing a mini contract, you would end up paying only $123, which is 1/10 of the standard. Now let's say after a week euro strengthens. Now we have bought it for $12323. So after a week euro becomes 1239598, and let's say you decide to sell the 100,000 euros standard contract that you have purchased. Now remember, whenever you sell, you always receive the lower price. So between these two, the lower price is 12395. So you receive 12395 times 100,000, which is 123,950. So you bought 100,000 euro for 12323, which is the higher of the two. That means you paid 123,230. Now you're selling the 100,000 euro for 12395, which is the lower of the two. That means you receive 123,950 US dollar. So that's the difference of 12395 minus 12323, which is 72 pips, or in dollar terms it's 123,950, which is this amount that you received minus what you paid, which is 12320, which is $720. Now the easier way out is to calculate the difference in the pips, which is 72 pips, which is 12395 minus 12323. And since we are doing a standard contract, the value of 1 pip for Euro US is $10. So if you make 72 pips profit, you're actually making a profit of $720, which is what we have calculated here. So your profit is 720, your deposit is 12323, which is this amount. So 720 divided by 1232 is 58% return. So all you need is 1%, which is $1,000 for a standard account and 100 for a mini. Now standard account, 1 pip value is $10 and the size is 100,000. For a mini, 1 pip value is $1 and the size is 10,000, which is 1/10 of the standard. Now there's one more thing which you need to know. When you see a chart, let's say US dollar Japanese yen chart, and you see the chart going down, what it simply means is US dollar is going down. Now remember one thing, always your focus should be on the first currency. So when the chart is going down, that means US dollar is going down. So when US dollar is going down, it means Japanese yen is going up. Okay. Similarly, when we did the calculation earlier, your focus should always be on the first currency. So for example, over here, when you looked at British pound US dollar, it increased from 1.9455 to 1.9555. The focus is always on the first currency. So when this goes up by 100 pips, it means British pound is going up. And when it drops from 19455 to 1.9355, it means British pound has gone down by 100 pips. So always the focus is on the first currency. So let's look at some more charts. Let's look at US Canadian. Now this chart is going down, which means US dollar is going down. That means Canadian is going up. Canadian dollar. Let's look at this chart. New Zealand US dollar. This chart is going up, which means New Zealand dollar is going up. That means US dollar is going down. Similarly over here, this chart is going up. That means Euro is going up. US dollar is going down. Again, this is going down. That means US dollar is going down. Swiss franc is going up. That's the end of the basics.